All right, welcome back to another episode of the Investing with TJ show. As you enter in, please hit that subscribe button if you're new. Please hit the like button just to get this video out to more people. And we are back on track with gold. As I've been saying, gold is currently enjoying near-term bullishness. All the random macro hits ain't taking its eyes off the prize. This is a tweet I put out last night. And basically, as you can see from the chart, we were trying to really dig ourselves out the ditch yesterday. And then we just had this huge push up towards the end of the day yesterday. And someone here named Jackson Carreras actually clicked like, which is good. And those of you who don't follow me on Twitter, you can follow me at Investing with TJ. But as far as my view on things, I've updated my gold forecasting model quite a bit. And what I've noticed in my updating is that we really should be way more, or things should actually be a little bit more bullish, or prices should be a little bit higher, I guess I should say, than where they are now, which underpins the fact why we've been seeing gold really reject these constant smackdowns that it's been getting. As you can see here, my lower limit for gold is 1759. My central limit is 1866. My upper limit is 1973. But we have not been seeing anything close to 1973. We've been struggling to even get back into the 1800s. The lower limit we've been pretty much close to. We've been down like close to 1773 yesterday from that VIX smackdown, and we're trying to crawl ourselves back. But every time we've been falling recently, we've been bouncing back pretty nicely, and that's what we saw yesterday. And as you can see, today we're at 1788, and it really looks like we're trying to just stay into the in the high 1780s, low 1790s. And when I updated my forecasting model, I was basically going throughout the month of November when I was doing this. I was assuming that the US M2 would be around 21,136 because that's pretty much what the average monthly increase would have given me. The actual number was 21,187. So I was pretty close, like pretty darn close, just off by like 50. But I undershot it by a little bit, which is pretty interesting. So we actually had more money thrown in than the average monthly increase. So also that's a good sign for CPI being a little bit higher, I would say, possibly, who knows. We have the real yield currently at negative 1.02. I undershot GLD. For a while I was riding 145 million. We actually got it around 162 million. And when I inputted all those, it rose up my lower limit. It raised. I'm sorry, I can't speak. The central limit rose up, and the upper limit rose up as well. So things looked actually a little bit more bullish for gold as I put those inputs in. So I think, again, that underpins the fact why we've been seeing gold really reject these smackdowns. And again, for those of you who are new, I just released all of my forecasting models. Gold is here at 199, silver at 99 cents, copper at 99 cents, or you can get all three for 249. You can get that in the links down below in the description. So where are we currently right now? And as you can take a look here using technical analysis, things look pretty good. I mean, right now, if you're looking at it, you're like, what are you talking about? But if you're looking at it, we are pretty much in somewhat oversold-ish territory, which means that there's only one direction up, unless something just completely crazy happens. Again, we have another one of those crazy hits, but I believe that we've bled out enough, and we are looking at the potential of prices rising a bit higher. Now, in my view, I think the dollar is definitely going to continue its downtrend. If you saw my video earlier with on silver, then you understand that as well. And as you can see here, the MACD is pretty much lightening up. It looks like it's trying to get back into positive territory. We're here at the lower band of the Bollinger Bands, and it looks like we're trying to edge back up above the trend line. We're kind of struggling there, but it looks like we're trying to fight that for sure. And the RSI is below fair value, and it looks like it's trying to edge back up as well. So that's good to see. And here we have the moving averages. 20-day looks like it's trying to pick back up and get back above water. The 253 looks like it's still trying to head down, which is good. And it looks like it's trying to head down at a faster rate than the 60-day is moving down. So again, another good sign to see. So once gold really takes direction, and I do think that direction is going to be up, then we should expect to see gold prices, in my view, get at least higher than where it is. We're pretty close to the lower limit, and I expect it to be, I would like to see it closer to 1866. But if it gets to around 1820, at least it's in the 1800s. But guys, let me know what you think about this in the comment section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Investing with TJ.